welcome to my YouTube channel again, I Stand Capital. Um, Today we'll be looking at how I made 500 pips, 500 pips from US 30, 500 pips from US 30. How did I do that? How did I manage that? How did I manage that? So I'm walking you guys through the trade. I actually took two positions. I'm at what? Two positions on this trade. I will show you guys how I did all that. So before getting to the video, if you're not following me, please drop a follow right now. Drop a follow, and if you're already subscribed, turn on the post notifications so that when I post a new video, you guys will be the first to get notified, right? Be the first to get notified. Also, like this video. I promise it to be full of value, as always. You guys know. So let's jump into the video right now. So as you can see, I actually made more than 500 pips, like all together, double positions, right? And I took this trade on multiple accounts. It was a crazy trade on Thursday, the 25th of July. So anyways, why did I take this trade from here? I will show you guys why I did that right now. So I think the first thing to do is actually to delete some of this. Yeah, I think that would be the most logical thing to do. Delete some of this. So I'll walk you through the trade right now. So I always try to start from the higher time frame and take my entries on the lower time frame, right? That is what I love to do. So the first thing I do right now is just go on the daily time frame. Once I go to the daily time frame, right? I go to the daily time frame, right? I can see this. Just delete all of this. So once I go to the daily time frame, I can see this movement. Market reacted from this demand level, right? Also from this demand level. So we're in a fucking bullish market. We're in a bullish market, also reacted from this demand level, right? And you can see almost every supply, right, is getting violated. This is supply zone. Got what violated. This is a supply zone. So the market is basically making higher highs and higher lows, right? That's how I'll put it. So when the market was here, all right. People were looking to buy more. People are looking to continue the buys. People are looking to continue the buys. Now, where would you want to buy from? This is a fair value gap. This space in between here, that is a fair value gap. Once the market violated that fair value gap, I knew that we'll be selling for a while. So we sold for, this is daily time frame, we sold for 1, 2, 3, 4, 5 straight days on US30. Start selling on US30, 5 straight days, right? And I had to look left. And I asked myself, where is the next demand level? Where is the next area the market will likely buy from? And this is the first one that came to mind. Number 1, right? This is my first demand level. It is still valid to me in case the market comes back to mitigate later on, right? And this is actually the last leg that led to the break of this high. If you go to the 4-hour time frame, that is the last leg, right? Market like making high highs and high lows. It took out this high, right? And this is the last leg that sponsored the break of this high. And this is an important demand area. It's an important low to me. This automatically became an important low to me. So what I do next is I want to buy from discounts. I just put my Fibonacci tool right here. drag it to that range. So anywhere below the 50%, anywhere below the 50%, it's a good area to look for what? Buys. Because the sellers will have been more exhausted, number one, and the liquidity, markets will have taken out all the liquidity it needs, and then we start buying back. So that is the logic I applied. You understand? That is the logic I applied in almost all my trades. I always like to buy from where? Discounted zones, higher time frame discounted zone, right? So that is my buying. That is my buying area. That is my buying area. This is the discount zone. So I want to buy in any area from here. So the next thing I'll try to check out is what? Something called 3 levels of drop. 3 levels of drop. Let me try and clean up this stuff. So I actually use two methods of to take this trade, right? So 3 levels of drop is something I've spoken about before, where the market will basically be in a, let's say market pushes up for 700 pips, right? And then it drops 100 pips, 100 pips, 100 pips, right? That is a 3 levels of drop, counter trend, and then what happens? The market now continues buy. It pumps up another 600 pips, and then it drops 150, 150, 150, and then it continues, right? So this one could be something like this. 3 levels of drop. I also check it out using this price measuring tool, pip measuring tool, right? And what I saw is that we've dropped. Let me delete this. We've dropped. Starting from here, we've dropped 50 pips. Sorry. We've dropped 50 pips. This is a 50 pip drop. We've dropped another 50 pips. Why are you looking at this too? Sorry. Another 50 pips. And this is the last 50 pips right here. So when I saw this happening, I looked left and I looked left. And I asked myself, do I have an entry model to my left? Do I have an entry model to my left? This is the 4 hour. Okay, I'll go to 2 hour. And I'm going to the 2 hour time frame. Let me go to the 30 minutes time frame. Now looking to the left, I can see, yes, I have my entry model right here. I have my entry model right here. Where market swept this low, right? Market swept that low. And this is what? My inducement. That is my inducement. And now this now becomes my protected low. Market should not go below my protected low, right? Market should not go below my protected low. And as you can see, on that Wednesday, on Wednesday rather, we had a what? A tap in. We had a tap in on that inducement, on that structural liquidity, right? And I was like, okay, this is perfect. This actually what makes sense, right? We got a tap in into that inducement. Our market made a breakup structure right here. Now, normally, people would actually go to the, this is the, let me go to the 15 minutes time frame, or was it the 5 minutes? I think it was the 5 minutes. Now, normally people will actually like see this breakout structure, right? Mark out this demand level, mark out this demand level, right? Mark out this inducement, and put a buy limit right here, and you put a stop loss right here. Now, I can see that it worked out right here, but please do not do this. Do not do this, because the market could definitely just, take out early buyers from Wednesday, right? Take out early buyers from Wednesday, tap into the other demand proper, take out your stop losses and move. This can definitely happen. So please be careful when you're doing this, right? So what I basically did was, I thought the market came here, created a rewards, a W formation. The market created a W formation at the low of the current day, right? And then I started buying. I also put my positions up. That was my first entry. Check my chart very well. That was my first entry. So I started buying around here also, a little below here, right? That was my first entry. I'm targeting somewhere around there, so 500 plus pips, right? That was my first entry, and it proved to be a very good entry, right? So how did I get my second entry? How did I get my second entry? Because my second entry was here. I actually have a video for that. I have a video for that. I think already 15 minutes time frame or so. Okay, yeah, so the 5 minute time frame. My second entry was here. Yes, perfect. So let's dive into how I got my second entry. How I got my second entry. I'll show you guys that, guys, this thing is crazy. You just have to get the knowledge first. And for this, my second entry, I'm going to give all credits to Mr. Stacy Buck. You can go to his YouTube channel and learn this from him, right? Just learn it from him. So, anyways, and I told you guys we've gotten this first level of drop one, right? Drop one, that's 50 pips drop, another 50 pips drop, another 50 pips drop. So once I see this, right, my mind goes into okay, the possible the sellers, yeah, could be very exhausted, and buying could happen. All I need is what? Breakout structure. Very important. All I need is breakout structure. So I asked myself, the next thing I want to see is I've had 3 days of breakout. Very important for me. I've had 3 days of what? Breakouts. Let me show you what I mean by 3 days of breakout or something. Now you can see this. This was the previous week, Thursday. Thursday closed below Wednesday. That's the first day of breakout. It closed below the low. Can you see? This is where it closed. This is where it closed right here. That is the first day of breakout. Second day of breakout, right here, it closed below the low again on Friday. And then the third day of breakout, you can see market just kept going up. There was no close below the low. This is the close, and this is the close right here. It's not below this low. So this first day of breakout, second day of breakout, third day of breakout, Wednesday, closing below Tuesday's low. And you guys trying to get what I'm trying to say. So these 3 days of breakouts is like a signal, like an alert. It's like price reaching somewhere, right? And you just getting ready for the move. So what do you need for that? I spoke about this before in my previous videos, right? You got 3 levels of breakouts, 3 levels of breakouts, right? Market needs to break structure, go back to closing price, and buy. This is one of my favorite trading pattern, right? You also need to have peak formation high, peak formation low, consolidation, peak formation high, peak formation low, consolidation, breakout, closing price, boom. That is a very, very powerful trading pattern. I don't know how you guys get for free. But guys, go learn it. Go learn it. It's a very powerful pattern. It happens every time. Most especially US 30, NASDAQ, US oil. It's very, very important you guys learn it. So the first thing I do when I come in is I just mark out my closing price. So this is the closing price. Right, that's its closing price. That's where the market closed for the previous day. Right, that's where market closed for the previous day. All I'm waiting for is market to break out of the consolidation. And I can see this is the consolidation right here. Right, that's the consolidation right there. We'll now have what? Higher high on the inside. Right, still inside. Right, basically still inside the previous daily high. Right, and previous daily low. And we also have what? Peak formation high, peak formation low. Consolidation, right? Everything I'm saying, everything's coming to pass. Everything's coming to pass, right? And all I need is what? All I need is my 3 candle pattern. After market makes this higher high, right? Market makes this higher high. I need what? 3 candles, 2 or 3 bearish candles. That's all I need. 2 or 3 bearish candles. That's my entry. That's my last entry model. My last confirmation entry model. If I don't see that, I'm not entering. Most of the times I miss trades because of that, though. You get, I miss trades because of that, because this first one right here, I could have market could as well as just kept going up from here. That gave me this last confirmation. I was watching the market from here, watching market from here, but I didn't enter. But not until it gave me my entry model. To give me my entry model, very, very important. Entry model. It just has high win rates. Yeah, it's high win rates, and I've stuck to it ever since I discovered about it. So, anyways, we've gotten our high, right? This is closing price. This is when the market closed the previous day. Market has dumped closing price. Broken structure again, right? Showing that it wants to buy. It wants to buy. And then it has to drop 3 candles. One bearish candle, right? 2 bearish candle, 1 bullish engulfing. Or 1 bearish candle, 2 bearish candle, 3 bearish candle, and there's no this here. And of course, though. And 1 bullish engulfing. Sorry about that, guys. So this is the entry model that I always preach. 1 bearish candle, 2 bearish candle, 1 bullish engulfing, 1 bearish candle, 2 bearish candle, 3 bearish candle, 1 bullish engulfing. It could be any of these two. It could be any of these two, right? So that is the entry model that I use for this trade. So I actually waited after this movement, dump, right? And then market dumped back again, back to closing price, right? And then what happens? This is closing price. This line right here is closing price. You just tap on it. So you guys know what I mean. Closing price is the price the market closed the previous day. It's a very, very important price metric, price magnet, the price magnet. So as it's tapping to that level, you can see for yourself. We have one bearish engulfing, two bearish engulfing, and then what happened? So one bearish candle, two bearish candle, and then one bullish engulfing on the 5-minute time frame. US 30 on the 5-minute time frame on Thursday. Very, very sweet entry, and that gave me around 300 pips on its own, right? On its own, and I was so fucking pleased. That was my second entry. And funny fact is that you can actually keep just stacking. You can just keep stacking on this trade. You see this one again, 1, 2, 3, pin hammer, boom. 1, 2, 3, pin and bullish engulfing, boom. And just keep stacking, until you get this break of this low right here, and then you know it's over. Get this bearish close, and then you know it's over, and then you are out of the trade. Very, very but personally, I targeted this area. Why is that? Closing price. Closing price. It's very, very funny. It's not a guesswork, right? Once market gets the closing price, most of the time, it's actually it usually reacts. Now you can see this pump up back to closing price. It gives us an information right there on Thursday. It drops back again, back to where? Back to closing price, back to Wednesday's closing price. And what happened? For that Friday, we just had that crazy push again. Now, if I'm coming to the market on Monday, this is closing price again for Monday, right? This is closing price again for Monday. If you want to get a buy, want to get a sell, this level is very, very important. That level is fucking important. So guys, just work on closing price and closing price, breakout structure, 3 levels of drop, 3 levels of rise, and you'll be fine. So if you guys enjoy this content, please drop a like, drop a comment, help the algorithm, share this video, and make sure you're subscribed to my content. Make sure you're subscribed to my content. I trade liquidity concepts. I trade sensible content here. 3 levels. I trade liquidity. I trade the 2 of them, right? They help me with confidence. They help me a lot. They help me confidence a lot. So, and guys, I have a free trading community where I post free signals, free educational tips, free trading content. The link to that will be in the description of this video. Just check the description of this video and join the Telegram community, the free Telegram community, right? And